In this video, I'm going to cover Palantir's newest out-of-the-box investment, share my opinion on PLTR choosing to make these sorts of buys, and then transition into some research that I've dug up by Ark Invest that helps to bring to light the overarching and driving reason for such actions by Alex Karp and team. Let's go. Palantir and Sarcos. According to Reuters, Sarcos Robotics will go public through a merger with a blank check firm in a deal valuing the combined company at $1.3 billion. The deal with Raptor Acquisition Corp is expected to fetch Sarcos with about $496 million in proceeds, including a private investment of $220 million from BlackRock, Millennium Management, and Palantir Technologies, among others. Yes, it appears PLTR is now involved with yet another SPAC. I presume they are not only helping to finance the company, but are also working with them in some other capacity, such as how Lilium and Palantir are development partners. I wasn't able to find anything about that for Sarcos just yet, so let me know in the comments if you have. Sarcos is a developer of wearable robotics equipment designed to help public and private sector workers lift heavy items and reduce injuries at the workplace. On its website, Sarcos claims to be enabling the industrial workforce of the future through robotics. I'll link its investor slide deck in the description, but unlike Lilium's, I could not find a mention of Palantir in it. PLTR's investing. I'm intrigued by Palantir choosing to make this investment and the one that I've already looked into further with Lilium. Both companies are in new industries and could very well turn out to be great bets, but PLTR is not free cash flow positive or profitable yet and still needs capital to fund growth and expansion. So taking these risks, however small, could be dangerous without a game plan. Again, we return to the question of why Palantir would do this, and the only answer must be that they are building Skynet with its software platforms, flying taxis from Lilium and robots from Sarcos. Logically, joking aside, I actually think the answer has to be data, but since both Sarcos and Lilium are just at the beginning of what they do, there's no historical data to aggregate, hence it's all a play on the future, a foot in the door, if you will. I will surely be asking Palantir management for clarification on this through the SAY platform on the Q2 conference call in May, so we can get some better clarity on the reasons and thinking behind these moves. After all, there haven't been any press briefings from Palantir on either of these two investments that have come to light. We only know about them from reporting about the investors involved. Palantir's data analytics. Now I'm going to run through some research done by Ark Invest. They haven't shared anything specific about Palantir, but they do release work on the themes and trends of the industries in which they invest. So I think that's the next best thing to analyze. Starting with big data analytics, life preservers to companies drowning in data. Data has always been critical to business decision making. Companies have devoted significant resources to expand into the digital universe, collecting, structuring, and analyzing data, such as customer information, purchase orders, inventory tracking, and transactional records. As businesses have digitized operations, the amount of data has grown faster than their ability to process and organize it. They desperately need tools to capture the digital breadcrumbs that customers leave behind. Behavior that once happened in-store or over the phone is moving online, resulting in orders of magnitude more data. Businesses can answer many more questions about their customers. How long do customers browse before making a selection? Is there a stage in the transaction process that takes abnormally long? What items do customers buy together? Are searches for additional items going unfulfilled? These digital breadcrumbs are valuable, but storing and analyzing them properly is challenging. Historically, the digital universe, or the amount of data created, replicated, and consumed each year, closely tracked digital storage capacity. For example, in 2006, the digital universe was 1.7 times greater than annual storage production. Now, it outstrips capacity by roughly 500% as shown in the graph. In this article, Ark Invest may not be intentionally and directly referring to Palantir, but I think it translates well to PLTR, being home to data aggregation and analyzing of the excess data that they are talking about. The growth of the digital universe is accelerating. As shown in the graph, it grew by 25% at a compound annual annual rate from 2006 to 2014, but is projected to grow 39% annually over the next 5 years, increasing from 8.5 zettabytes at the end of 2015 to 44 ZB by 2020. Businesses are inundated with more data than they can handle and need new tools to incorporate insights. Big data analytics and visualization companies provide solutions for the volume and variety of data being produced. They go on to list a number of stocks, including Splunk, which they no longer own, so I think Palantir fits in well here, as I've been saying. And Ark says how these businesses provide solutions for companies trying to transform rivers of data into useful information. From a $7 billion market in 2014, data analytics is poised to scale multiples higher. Of the 6.1 ZB of data generated in 2014, 22% contained valuable information, but only 1% was analyzed, suggesting a cost of roughly 10 cents per gigabyte analyzed. Though these prices are declining, if all valuable data were analyzed at 10 cents per gigabyte, the total addressable analytics market would measure in the hundreds of billions of dollars. The total addressable market will depend on how fast the cost per gigabyte analyzed declines. Companies with truly innovative and useful data platforms will have an advantage because superior technology creates a pricing moat. For example, they use Splunk again, which specializes in disparate data streams, and rendering them comparable has held pricing power well above the average cost per gigabyte. By our calculations, it generated $1 per gigabyte analyzed in 2014. Interestingly, even at this price point, Splunk is taking share, suggesting the high value add of its analytics. Various companies, and even more mature ones, such as IBM, which Palantir is partnered with and works with, are capitalizing on the earliest innings of the data inundation game. While companies have always collected data and the transaction ledger has been valuable for centuries, bits now are flooding the so-called ledger book. The advantage will lie with the real-time ledger book makers who can transform the torrent of data into actionable knowledge. And let me just say, as someone that follows Palantir closely, I listen to everything they have to say, whether it's the management speaking or a press briefing they put out. When Ark Invest talks about actionable knowledge, that is literally what Palantir is designed to produce with its platforms. And this is a second report which I'm going to run through for some more analysis from Ark Invest. Gaining share in a big data tsunami. Every day, enough data is added to the world's digital universe to fill 1.4 billion iPhones. Yet, lots of data will simply remain a pile of ones and zeros, eventually dissolving into the ether unless it's analyzed and turned into actionable, useful data. The uses of this data are nearly infinite, from optimizing quick delivery of a package to predicting voting trends from a sea of Twitter feeds. Useful data is a subset of the digital universe. Currently, this subset stands at a quarter of all data, which was, at the time of this article, estimated to grow to 37% by 2020. As it increases share in a rapidly expanding universe, useful data is in the process of exploding. Between 2015 and 2020, useful data was expected to grow 7.5-fold, as shown in the graphic. The opportunity to derive insights from rich data is similarly evolving rapidly, yet an overwhelmingly large proportion of useful data is left unanalyzed for lack of affordable hardware and software sophisticated enough to ingest, store, and analyze the volume, variety, and velocity of data. As the graph shows, analyzed data is gaining share because companies recognize the value of useful analytics. Consequently, the big data startup space is growing rapidly. The amount of data analyzed is likely to grow almost twice as fast as is useful data, as shown in the graph. Again, I'd think of Palantir in the same sense as when Splunk is mentioned each time, considering Ark is buying PLTR stock since dumping Splunk stock. Splunk's positioning as a broad yet powerful analytics tool for machine-generated data is driving growth as devices proliferate. Splunk's combination of ecosystem partners, its thriving app store, and integration into various aspects of a company's operations creates a sticky platform. Splunk is increasing its market share despite charging a 10-fold price premium per gigabyte analyzed, a testament to the value of the company's platform and the return on investment it generates for customers. Splunk is riding down the technology cost curve, providing an increasingly valuable service at lower price points. Though Splunk has cut listing prices by around 25% annually over the last few years, revenues have grown 45 to 80% per year. And then they get into more Splunk analysis. So in conclusion, while Ark did have a lot of great things to say about Splunk, and they've even done some detailed analysis here, which I've shared with you, a lot of the high-level, big-picture information is applicable to Palantir, and that's what this video was all about, sharing the importance of data, why Palantir may be going after these SPACs to get their foot in the door, just in case these small companies do become big winners in the future, and Palantir is able to leverage that data and the association with those companies for, as Ark put it, the nearly infinite uses of that data. So there's a lot to think about here, but I did want to share at least some of what Ark Invest is thinking, because I know it's kind of hard to get a read on them for their thoughts on Palantir. Anyways, let me know what you think about this in the comments. Until next time.